Hey everyone, Evan from the Trade Risk. Happy Tuesday, October 21st. Let's jump right into the SPY, the ETF that tracks the S&P 500. And it's been an amazing 4-day, absolute barn burning rip to the upside. You know, just last Thursday we were down here at 183, and today we closed over 11 points higher, up at 194. So it's been it's been a very fast squeeze here, and we were very oversold here. We did talk about that, but we were in a downtrend, and these types of squeezes certainly can happen, and this one extremely fast. I think the sentiment definitely was pretty bearish down here, and I think a lot of people perhaps were eager to short some short a bounce, and clearly it just hasn't worked out, and we've just continued to squeeze higher, sort of in the midst of earnings season, which has been sort of a mixed bag, probably more on the negative side than on the positive side. However, the market, you can clearly see how it's responding right now. So it's so that's sort of interesting. With a bounce like this now, we're 11 points off the lows. This is not a place, certainly not in the not in the indexes, that I would want to be establishing new positions. Some of the individual issues, it's a whole different ball game. Those can certainly still work, but you got to be a little bit cautious now. We are still sort of in a at least a range-bound market. I don't know. I mean, it's still a downtrend if you want to measure from this impulse leg from 200 down to this 183 over the course of September, mid-September to now, and we are seeing a squeeze, and we've basically retraced 50% of it. If you're looking at this swing low, we are at best in a range-bound market. And it's still something that you want to be careful. Like I say, I just wouldn't want to be establishing a new position at today's close. I'd much more want to be lightening up. If you have positions on, keep them, but lighten up. Be aware that we definitely could come and fill in some of this area back between 183 and 191. I think that's probably the more probable case. Look at the IWM. So this 108 level was the big breakdown level, and it really was just turned out to be a big bear trap right now. And I mean, it's too early to say it's been a bear trap, but as of right now, if you've been shorting under here and you're underwater, then definitely it seems like a trap to you, and you're feeling some pain. So it'll be yet to be seen whether or not we fail here. Maybe tomorrow we just start selling off, and the sell train kind of resumes. But for now, I think it's definitely it's neutral to neutral at best, I suppose. And I think both sides, it's sort of tricky here. You don't want to chase, but yet it's tough to kind of fight the freight train. So it's definitely something you need to be careful of. Volatility rocketed last week, and you can see it just really dumped. As fast as it went up, it's basically given it right back in essentially the same amount of days. The VIX now basically back where it was right at the beginning of Friday of last week. So it's been quite the roller coaster ride, for a lot of individual issues and in the indices as well. So let's get into some individual names. We'll look at natural gas first. This one was holding pretty strong in here, but it did break to the lower end of this range. You can see, look at a lot of tails here on the bottom end of these candles, as it was breaking down, and today a nice green body, basically reversing all of Monday's action. So you can see there are sellers, the buyers are fighting down here, but we'll have to see. It's still in a very bearish formation. UNG would have to at least recapture this support level down here and eventually get above 22 to really get some positive momentum on its side. Next, let's look at Apple. This one did report earnings yesterday. Earnings seem to be pretty positive, and the street reacted positive. It was an up 2.7% move, which I think is a good move. Especially the run that it's had. Look, I mean, dating back in the past 6 months, we've already really come from $70, $75, and we're up above $100, and we're basing out real nice. So this is real constructive action. I'd like to see. I'm very interested in Apple on the long side. I wanted to see a break above 103 really. I tried to get long it today once or twice just to see if we could build some momentum into the close. Couldn't quite get there, so I am flat. I don't have any position on Apple, but I would be a buyer above essentially today's highs, 103. Get a close above there. I think this one can start to move, but for now, I'll still say it's suspect. It's a trappy. It's in this range still, so I just want to be careful, waiting for a clear sort of all clear signal to get involved. Google, this one did report earnings. Not a whole lot of movement, I suppose. It's still kind of in this much larger now range that it's been in for, the pivot lows from May. And then we tried to essentially make a run for the highs here throughout the summertime months. And then we did break down, retested, and it seems like it's finding support. So not too much to say. Google just needs more time. One way or the other, I really wouldn't be too interested. Netflix is another one that reported earnings. So not a very good report at all in Netflix, but down almost $100, and it just basically came out of the gate with some pent-up buying around this 330 level. And if you zoom out, you do basically have some structure in here back from late April, early May of this year, and you can see that's where the market sort of keyed in and found some buyers. I don't have, if you look at a price by volume chart, you can see all in here under this 420 level all the way down to 360 or so. This is a pretty big volume null. You can see we really, we went up fast, we went down fast, we went back up fast. There was no big chopping around, there were no ranges that really got carved out, so there wasn't a whole lot of supply in this $80 span here to slow price down. So that's sort of why we saw such an it certainly helps some of the reasoning behind this outsized move off of earnings. So it'll be interesting. You can see it is fighting to try and fill in some of this gap here, this massive gap. So above today's highs, above the weekly highs, yesterday's highs around 370, could see some more upside. But again, it's a damaged chart in the longer term. Tesla has been finding some support into 218. I don't know when this reports, but it is pretty soon, or next week, I believe. So just keep this on your watch. Not a whole lot to say about that one right now. Amazon was real strong today. Still kind of a mess here when you're looking at the bigger picture. I know this one does report, I believe, this week as well. So you just want to keep an eye on it. It needs to, really reclaim 320, 332 to start getting constructive again. But it did sort of stop the bleeding here, at least in the short term. So we'll have to just keep an eye out for earnings. Priceline, another one that really, similar to some of the other the big breakdowns we were watching. This one did really come back and reclaim it pretty quick. 1120 was the level to watch, and you can see we did break above that and close pretty strongly today. Not sure, you'd have to check earnings on this one and when this is out, but a fast moving stock down 1020 last week. We're at 1130 this week, so 100-point move in this name to the upside on a nice bounce, so it'll be interesting. Clearly some overhead supply will be setting in right around these levels, so it's tough to chase, but again, it looks at least there's some some underlying demand for this name to put in that type of a squeeze. Next, let's look at some of the other new high flyers here. GoPro, this one had a nice day today, found some support down just sub $70, or at this, call it $68 level, and it did have a nice bounce. $80 was a level of interest previously. You can see it's struggling just a bit there. So, not too much to say one way or the other in this name. It's still a fast mover, so I think you need to be aware of that. But right here, it's just sort of dead center. It could go either way. So not too interesting. Now, Alibaba, this one, I had a position in this long towards the end of the day as it broke above 91, got a nice squeeze all the way up to 92.50 before completely, essentially fading that squeeze and closing at the breakout level. So, given where the market is, I decided to just err on the side of being defensive, and I closed my position. I'm definitely going to be monitoring it pretty close. 91 was the level I wanted to be involved at. You can see we closed basically right at it, right underneath it. So, if we hadn't, just had a 100 handle move in the SPY, in the, cash market, then I'd probably leave it on. But, given where we are, I just think that downside, action is probably more likely over the next rest of this week than upside. So I just want to play a little defensive here. I'll be watching it close, but it definitely does look like it's trying to ramp here and clear some of this initial this initial supply here off of the IPO. So keep an eye on BABA. That one looks good. NQ. This is one I had on. I closed it today. I was very, very fortunate to close it today. I got involved in it on Thursday. Yeah, Thursday. Sold some yesterday. I closed it today after we had this nice push into this almost $10 level, and then we started rejecting off of it. It just wasn't acting well as the market was moving higher early in the morning. I decided to close it, and then all of a sudden we had, I don't know what it was. I'm not even sure what the news was, but we just had a pretty volatile rest of the session. And this one definitely caught some eyes of a lot of traders. We had this nice volume null that I pointed out basically yesterday on a chart that I posted. It's definitely it's still an interesting chart with this base that it's put in, and I think it really needs to hold above $8. And if it can hold above this $8 level, it could probably make a nice another push here. And it is a fast mover once it wants to go. So I think if it can hold on to 8 over the next couple days, you might be able to get another trade in NQ, so keep that on watch. Coca-Cola, this one reported earnings yesterday, disappointed the street, down 6%, which is pretty violent move for KO. It's just sort of a mess. Obviously it did some damage today. It's just hanging now where there's been a lot of previous supply traded around this $40 level. It's not too interesting. Long term, if you're a bull in KO, it's probably a good buying opportunity. But for me, it's just, there's some action there, but not too interesting. IBM, this one also reported Monday, got killed yesterday in yesterday's session, and then saw more downside follow through today. So IBM, let's take a look at the weekly chart real quick. You can see what it's breaking down from, and there's a ton of supply up here, basically for 3 years almost of supply up above this 170 level. So you get a lot of longs that are underwater here. So I wouldn't be surprised to see kind of this bleed lower here, or at least need a lot of time to go sideways before it can recoup itself. Next, here's a position I'm in. It's still fairly actionable. NAVI. This one's hanging tight up here. Nice base of supply that it broke above around $18. So watch this flag up here. This one could offer some more upside movement as the week goes on. HAS. This one was a earnings reporter on Monday as well. I got involved in it yesterday. Right around, 56 and change, I believe. And it had some nice follow through today. Looks good. These are all-time highs for Hasbro. So, I'm looking for some more upside here. So keep that one on watch. Next is DATA. This one had a nice move today. Not involved in it, but it did break above this resistance level around $74. So let's see if this can continue. It's had a pretty quick move off of, all the way from 63. Nice, some nice green-bodied candles here for the past essential week. So let's just see if that one can continue. I don't know when earnings are, so you just want to check that. Another setup to watch. This one is WAL, Western Alliance Corporation. Keep this on watch. Nice tight range here for basically all of 2014 and then some. So 25 on the upside, 22 on the downside. Keep that on watch. Next is Krispy Kreme Donuts, KKD. This one's been kind of going sideways here. It's been carving out this base, longer term base over basically the entire year of 2014. And I think above 18, this one can start to get some upside momentum again. If you zoom out here, you can see just sort of the big base flag, whatever you want to call it, that's been developing ever since the run-up started, prior to 2013. So that one could be an interesting one. And finally, a little biotech name that's on the radar. Usually sub $5 I stay away from, but this one could be interesting. $4.35 is the trigger or so. You can see if you zoom out here, you can see it had a nice run up for 2013, chopped around, broke down earlier this year, and it's been finding its footing for now several months. and it, above 435 could start to retrace some of this breakdown that we saw back in March. So that's another one to keep on your watch. So that's all I got for today. Again, be careful out there. It's a hell of a squeeze right now. I'd much rather be looking at names that are breaking down, not the indices. I don't want to fight this and short this really, but I'd be looking for names that are breaking below bases, over the next couple of days to maybe lead us back down, if on a retracement back down. But again, you have to respect this type of bounce that the bulls put in. They're definitely present, so they're not just going to roll over and and just forget about this year. So I hope that helps. Good luck trading, and thanks for watching.